All right, let's talk about one of the biggest headaches for any trader. You found a fantastic trend, everything's moving in the right direction, but getting that entry timing just right without feeling like you're chasing the price, that's the tricky part. So today, we're going to break down a really powerful but simple combo of tools to help you nail those entry points.
You know the feeling, right? You're staring at the chart. The trend is just obvious. It's beautiful. And the question screaming in your head is, okay, where do I jump in? How do I get a piece of this without getting totally wrecked? It's a classic problem.
Check this out. This is a 1-hour chart of the Aussie yen. The source material calls this a sweet uptrend, and they're not wrong. You can clearly see it's making higher highs, higher lows. Now, your first instinct might be to just smash that buy button, but we all know that buying at the peak is just asking for trouble. The real game is figuring out how to get in on the pullback, and that's exactly what we're going to do.
It's this constant tug-of-war, isn't it? On one shoulder, you've got FOMO, the fear of missing out, yelling at you to get in before the trend leaves without you. And on the other, you've got the fear of a bad entry, making you hesitate. Well, what if I told you there's a way to find a happy medium? We're going to use two classic tools together to find an entry that just makes sense.
Okay, tool number one is the good old trend line. Seriously, it's one of the most basic things in a trader's toolbox, but it's so effective. In an uptrend, like this one, you literally just connect the dots under the major swing lows. Its job is simple, to show you the direction of the trend and act as a sort of moving floor, or support.
And here's tool number 2, the Fibonacci retracement. Now, I know this one looks and sounds a bit more complicated, but trust me, the idea behind it is pretty straightforward. It just uses a set of special ratios to help us predict where the price might pull back to, and then turn around before continuing on with the main trend. Think of it as a roadmap for pullbacks.
Now look, each of these tools is pretty useful on its own. A trend line is great. Fibonacci is great. But the real magic, the A-plus setups, that's what happens when their signals overlap. When a key Fibonacci level lines up perfectly with a trend line, you've found something special.
Okay, enough theory. Let's get our hands dirty and walk through this AUD/JPY chart from our source material. We're going to see exactly how this combination works in the real world.
So here we are back at the chart. You can see we've drawn a clean, ascending trend line that connects the recent lows. And what's important is that for the last couple of days, the price has come down to this line and bounced off it. It's respecting the line. That's step one. We've confirmed the trend.
So, the uptrend is solid. The trend line gives us a general area to watch. But we want to be more precise than that. We need to be surgical. So this is where we pull out our second tool to really zoom in on a specific entry zone.
All right, now watch this. We take our Fibonacci tool, and we click on the very bottom of this recent move, the swing low at 82.61, and we drag it all the way up to the absolute peak, the swing high at 83.84. And just like that, boom, the tool projects all these horizontal lines onto the chart. These are our potential pullback levels.
And here it is. This is the moment where it all comes together. This is confluence. If you look closely, you'll see the 50% fib level lines up almost perfectly with our trend line. And right below it, the 61.8% level also intersects the trend line. This creates a powerful little support cluster. It's like two different maps pointing to the exact same buried treasure. You've got trendline traders and Fibonacci traders all looking to buy in the same spot. That's a huge deal. So this is it. This is that moment of anticipation for every trader. We've done our homework. We've identified this high probability zone where support should be incredibly strong. The only question left is, will the market agree with us? Is the price going to pull back to this spot and bounce? All right, let's see what happened next. This is the payoff. This is where all that patient analysis hopefully leads to a fantastic trading opportunity. And would you look at that? It's beautiful. The price did exactly what our analysis suggested it might. It pulled back right into that confluence zone, kissed the trend line right near those fib levels, and then, boom, it took off again. An entry right in that zone would have been just about perfect.
Let's really focus on that 61.8% level for a second. In the world of Fibonacci, this is often called the golden ratio. It's a really significant level of support. The fact that the price bounced right where this powerhouse level met our trend line, that's what turns a good setup into a great one.
And I just love this quote from the source material, because it just perfectly captures what happened next. This wasn't some weak little bounce. The buying pressure was so intense that, the price zoomed up like Astro Boy and blew right past the previous high. That's the power of getting into a strong trend at just the right spot.
So the great news is, this wasn't just a lucky guess. This is a repeatable strategy. So let's break it all down into a super simple, step-by-step playbook you can start using right away. Here we go. 5 easy steps. First, and this is non-negotiable, you gotta find a clear trend. Second, draw your trend line. Third, pull out that Fibonacci tool and draw it on the most recent move. Fourth, this is the secret sauce. Find that point of confluence where a key fib level and your trend line meet. And finally, step 5, that zone becomes your high probability area to plan an entry.
Now, before you race off to the charts, here's a really important reality check from the source. This stuff is part science, part art. Drawing trend lines can be a little subjective. The way you draw it might be slightly different from how another trader draws it. That's just the nature of the game.
And that really brings us to the biggest takeaway here. There are no guarantees in trading. This strategy is not a crystal ball. What it does do is help you stack the probabilities in your favor. It's all about moving away from guesswork and toward making smart, educated decisions based on where multiple signals point to the same conclusion.
So now you've got this awesome combo in your trading toolbox. It's a logical, repeatable way to find great entries in a trending market. The only question left is, how are you going to use it? So go on, pull up some charts, and see if you can start spotting these confluence zones for yourself.